Friends, in today's video, we will discuss Motilal Oswal Microcap Fund. As you might be aware, among all types of mutual funds, equity mutual funds provide the best returns. And even within equity mutual funds, small cap funds deliver the highest returns. But microcap funds are those funds that give even higher returns than small cap funds. However, until around 2 years back, you didn't have the opportunity to invest in microcap funds. However, about 1 year and 11 months ago, that is almost 2 years ago, the Motilal Oswal Microcap Fund became available for investment in India. And since then, its performance has been outstanding. In less than 2 years, in just 1 year and 11 months, it has provided an excellent return of 66% to its investors. That means those who invested in this fund at the time of its inception, when the NAV was just ₹10, today its NAV has increased to around 16.66. In absolute terms, if you had invested ₹1 lakh in this fund around 2 years ago, to be precise, around 1 year and 11 months ago, then it would have been grown to ₹1.66 lakhs by now. No fund from any category has given such good returns in the last 2 years. In the next section of the video, we will learn what microcap companies are, in which these funds invest in, and what kind of risks are associated with microcap funds. Microcap companies are those whose market capitalization is lower than the top 500 companies listed at the NSE. Among the top 500 companies, the top 100 are large cap companies. Next 150 companies are mid cap companies, and the remaining 250 are small cap companies. Now the 250 companies that come after these top 500 companies ranked from 501 to 750 are called the micro cap companies, in which Motilal Oswal Microcap Fund invests. So obviously their market cap will be much lower. Their market cap will be even lower than the small cap companies. These are companies with very small market capitalization, and such very small market cap companies have their certain advantages and disadvantages. The biggest advantage is that because these are very small companies, the growth potential in them is very high, and this is why microcap fund provide best returns in long term, followed by small cap funds. Though until 2 years ago, micro cap funds were not available for investment. But since then, Motilal Oswal Microcap Fund has filled the void. However, the disadvantage is that small cap and micro cap funds are highly volatile. In case of a market correction, NAV of these funds falls sharply. However, on the other hand, when the market recovers, these funds recover very quickly. And this phenomenon you can witness from the fund's performance over the last 2 years. It has generated 66% returns in just about 2 years. During this time frame, fund has witnessed a bull run in the market and also faced a correction phase of around 5 months, and thereafter some recovery in last 2 months. And despite all those ups and downs, as of today, this fund has given 66% returns on your investment in just about 2 years. Now, in the next section of the video, we will discuss who should invest in such funds, how much should you invest, and how the investment should be done. For any fund that is highly volatile, like this microcap fund or even small cap funds, which follow high growth investment strategies, the right way to invest is through SIP, because SIP gives the highest returns in volatile funds. More fluctuations there are in the market, more fluctuations there will be in their NAVs. And since you are investing a certain amount every month through SIP, you will be investing same amount during market downturns, and therefore accumulating more units at lower price. And when the market goes up, you will benefit from that immensely. Further, as microcap index gives the best returns compared to any other index, so in such an index which gives the highest returns and is also highly volatile, the best way to invest is through SIP. Otherwise, you can also do lump sum investment. But even for lump sum investment, the right approach is to divide it into certain equal installments. Whatever your investable funds are, invest them monthly, divided into 3 installments, 6 installments, 10 installments as per your volatility tolerance, and then invest accordingly. Even in lump sum investment, this will give you an average price and you will not be caught at around peak of the market. Further, before investing in such highly volatile mutual funds like microcap funds or small cap funds, you first need to assess your own psychology, that is your volatility tolerance level, that when there is a lot of volatility in the market, how you are likely to respond. As during periodic market corrections, these funds may correct a lot. They can fall so much that it may scare you. Their NAV may fall by 50% or even more if a deep and prolonged correction sets in the market. Your investment can get reduced to half or even less. Can you endure such corrections? Then, for such investors who can tolerate such deep corrections, microcap and small cap funds are the best option for creating long term wealth. So, if you understand this and know that such funds ultimately recover very fast when correction is over, if you have that conviction, only then you should invest in such funds. And even if you decided to invest, only invest a certain portion of your total portfolio in micro cap funds and small cap funds, especially if you are not prepared for enduring high volatility. On the other hand, if you are prepared to endure high volatility and this volatility doesn't bother you much, and if you have the conviction that small cap and micro cap funds will recover eventually and generate great returns for you, and if you are willing to stay invested for at least 5 to 10 years, then you can go ahead and invest in micro cap or small cap funds. Just remember, when markets fall, don't stop your SIP. Instead, invest more if you can. This video is only for educational purposes and is not an investment advice or recommendation. Always conduct your own research or consult a financial advisor before making any investment decisions.